So lovely to see so many people on the session today. Thank you for joining us. I'm joining you here from KwaZulu-Natal. My name is Candace, and I'm the host for your meeting today. And today we are going to be looking at the fantastic subject of finances. Yes, I know you're all rolling your eyes. It's not something that we enjoy. However, today we are going to be looking at it from a completely different perspective. We're going to show you that finances are the key to your business and that you don't have to be afraid. We are going to be looking at why you need to have systems and procedures in place. All of us as business owners love to be successful. That's our goal. We want to be the business that has lots of raving fans, people that are talking about our business to their colleagues and their friends. We want to stand out from the crowd so that people find our business when they need our services or our products. But how do we make sure that these clients or customers keep coming back for more? It all comes down to being exceptional, standing out from the spotlight, or standing out in the spotlight so that your customers feel as if what they have to say matters and that what you do for them is tailor-made just for them. So whether you're selling a product or a service, how you run your business and the structure that you use in your business impacts our customers' experience. One of the first systems that we need to get in order, which is what we're discussing today, is our finances. Yes, it is an important place to start. And if we consider it from a different perspective, you might just agree with us. Today, our guest speaker has so much to share with us, and she is going to ask you questions like, if you want to sell your business, what is the first piece of information that the buyer wants to have a look at? Yes, you guessed it. It's your books. They want to know, what does your business do? What is your business about? And how does this all impact them as the buyer? What about if you are growing your business? You want to bring on more vehicles. Perhaps you are wanting to upgrade your equipment, or maybe your business is actually at the stage where you want to invest in property. The first thing that the bank is going to ask for is, let's have a look at your books. Where are you going? Are you a suitable investor for them? And are you going to be able to pay back the loan that you're asking for? So your finances are a set of records that are testimony to how well you run your business. And today, this is my colleague Nolene Wood, and she is from Easy Group, and she is going to share with us some of the tips, the techniques, and the basic steps to follow so that you can look at finances in your business from a whole different perspective. If you have any questions, we are going to be answering those questions towards the end of the session. So get them ready, add them into the chat bar, and we will pose the questions to Nolene later, and she will be happy to answer as many of them as she can. So without further ado, Nolene, thank you so much for joining us today. We are so excited to hear your wealth of knowledge that you're going to be sharing. And if you can start with the basics, and we will take it from there. I know it's a nerve-wracking experience, but think of this as a conversation. It's between two colleagues, and what you have to share, I know many of the people in our audience are really going to enjoy, and we will take it from there. So thank you for joining me today.
It's a pleasure. I always start with my clients by saying, how are you running your business? And most of us jump into business and we just start trading out of our personal bank accounts, and I call it our wallet. So we run our business like a wallet. So we're getting money in, we're paying money out, and as long as there's money in the wallet, I'm doing fine. Okay, so no costing is being done, no record keeping is being done, nobody knows anything about you, SARS doesn't know you, Labor doesn't know you, and you think you're all good, running under the radar, trading out your personal account, using your business as a wallet. Everything runs through the accounts. Yeah, and unfortunately, what happens is when you're doing the one job, it's paying you, and then you start eating that money up to do the next job because you haven't costed correctly. So your gross profit if not worked out carefully, is the first pitfall in your business. So you buy the cost of sale to make your purchase, to do what you need to do for 50 Rand, and you move it on to your client for 100 Rand, and your GP is 50%, and you've got your 50 Rand gross profits. Okay, that 50 Rand now has to pay your expenses and the running of your business, which takes you to net profit. And that's where it goes horribly wrong. You haven't taken into account the running of your vehicles, all your phones, your rent if you're renting an office or a warehouse, your insurance, your internet, your staff costs, your staff welfare. So 50 Rand is now going to pay for all of that and give you a net profit. But does it? Very often, it doesn't.
No, it doesn't.
Rand doesn't cover the running of your business. Now you're saying, okay, so where do I go to fix this? Gross profit. You've got to go back to your gross profit and make sure that enough gross profit is there to cover the running of your business and give you a net profit. So that is crucial. So if you've got a good admin system in place where you've got a bookkeeper, a payroll administrator, a human resources office running, deal with your staff and their contracts, cost to company and staff is also very important. You don't have all those resources in place. You have no clue as to what your business is actually doing. We call these management accounts. Management accounts will take your sale and show it to you. Take your cost of sale, show it to you. Give you a gross profit. You can see it. Below that, you've got all your expenses. It'll show you your monthly expenses, give you a net profit. Oh, I'm running at a net loss. I have to go back to GP, gross profit. How do I fix it? I never thought of, oh, I'm on a job. Now I need a screw or a nut or a bolt, back in the car, back to the hardware store. That cost wasn't factored. So when you're not factoring in the other costs of your business into your GP, you've already lost the battle. But your wallet is running fine. Money's coming in, money's going out. You think you're okay until you realize you're not. Get legal, get a bookkeeper in place, do it properly, register with the necessary governing bodies that govern all of our business in South Africa. It's actually not scary. If you can't afford to put staff in place, a bookkeeper, a payroll administrator, an HR office, debtors and creditors clerks, you can't afford that, outsource it. There are so many of people like me that work outsourced that can do it for you for a fraction of the price. So you haven't got the staff implication, you haven't got the staff costs, the drama that comes with staff, so you can successfully run your business on the admin side by partnering with a bookkeeper, payroll administrator, an HR consultant, tax consultant, and an accountant. If you can't afford an accountant, we know they're expensive. You come to a bookkeeping practice like mine that offer financial, that SARS accept and banks accept and SIPSI accept. So now we're going to your business types. What type of business are you running? Are you a sole prop? Are you a partnership? Are you a PTY limited, CC used to be called? Then that governs who you report to. Sole prop, all you're doing is declaring your tax. And you think you're good. Sole prop comes with the highest tax brackets on income tax. So everything you take out of your business, you're taxed on, and every cent of profit is taxed. So sole prop comes with its own pitfalls. And you personally are responsible for all the legalities in the business. If the business makes debt, you personally are responsible. If the business goes bankrupt, they come after you and your personal assets. So sole prop comes with huge risk, but it's the easiest way to get into business because now I'm no lean Joy Wood, trading as Easy Group, my personal bank account is good enough, I kind of keep a record in that bank, sort of, and I'm good, and I now give it to a tax consultant and she says, I need monthly management accounts, I need an income statement, I need your balance sheet, I actually need a set of financials. Where do I get that from? No record keeping's been done. So now your wallet is running your business. You don't know where you're at. You're legally responsible as an individual for all that debt. So sole prop, although easy and comes with less cost to run, as in who you have to report to, is not the best option. So we go to a partnership. Now I've partnered with my mom, I've partnered with my sister, I've partnered with my friend. We get our share value. I'm putting in 60%, he's putting in 40 or 50-50. Same thing as a sole prop. You will pay tax on what you take and you will pay tax on your percentage of the profit. So if I've got 50%, 50% of that profit goes to me personally, and I pay tax on it. Okay, it doesn't have the same level of reporting as the next option, which is your PTY, but you've still got to declare for income tax and you've still got to do your provisional tax returns. So there are returns involved, which then pulls in a tax consultant, pulls in an accountant. So you can't step away from those responsibilities, even in sole prop or partnership. The best form of business is a PTY limited or a little shelf CC that you can buy. They're not expensive. Charlene, who I've tagged as a link, she does all of that for you. She can sell you a PTY limited. She can get you fully registered with SARS and with labor. So now we come into the cost of running a PTY. There's an annual 60 return, which you have to pay to do. So there's that cost. There's the cost of your provisional tax and your income tax. So those are costs. The other costs involved apply to all three types of business: your bookkeeper, your payroll administrator, and your tax consultant or accountant, because whichever way you're declaring to SARS, it's either going to be through an accountant or through a tax consultant. So if you can't afford an accountant, you go to your tax consultant and they declare your tax. So the nice thing with the PTY is it holds its own legal right. So the PTY becomes the legal responsible entity. So debt, and if you have to fold and close and your business has failed, the PTY holds that responsibility. Not you personally, so it's not your car, it's not your house, it's not your furniture, it's not your bank account, it's not your savings, not your investments. The PTY holds the legal responsibility for that business. At this point, you need to understand there is a clause in the PTY that says if you knowingly ran your business into debt, you can and will be held responsible at a personal level. So it doesn't completely indemnify you. You can't open a PTY, go and run up debt everywhere and close, because now I'm bankrupt and the business can't pay its debt. They will prove that you knowingly took out more loans, bought this, owed your suppliers. Suppliers can come after a PTY. If they can prove negligence on the members' side of it, you'll be held personally responsible. So know your parameters in your business. SARS say, if you do not know the legislation of running a business, then you should not be a business owner. Saying, I didn't know that, doesn't indemnify you. SARS say if you're going to run a business, do it legally, do it properly, and understand the legal and your requirements to submit and declare, whether it be to labor, to SARS, or to COIDA, or to CIPSA. So these are the returns we're talking about now. So now we say, okay, we've got our bookkeeping in place. We've got our admin running. Admin would run your debtors, your creditors. You've worked out your GP, it's good. You've outsourced, you've partnered, or you've employed staff that know what to do to run the background of your business. You're the front of the business. You're making the sales, you're making the contacts, you're getting the customers. That should be your focus. So behind you should be a team that's doing all the rest. If you've got all of that in place and you're happy and you're legal, these are the things that you have to do in your business, regardless of type, sole prop, partnership, PTY. If you have staff, you have to be registered with Department of Labor. So you need a UIF number. If they are earning above the taxable amount of, at the moment, I think it's 7,200 Rand a month you can earn without paying tax. So if your staff are earning less than that, you don't have to register with SARS for PAYE. The minute your staff need to start paying tax, you need to register with SARS for PAYE. So now we've registered with labor, we have a UIF number. Now we employ staff that are earning above the minimum taxable amount. We have to register for SARS for PAYE. Also, another vital registration that you cannot avoid is COIDA. It's Compensation of Occupational Injuries and Disease Act. We used to call it Workman's Comp, now called COIDA, okay? If you have staff, no matter what type of business you are in, you have to be registered with COIDA. This is your insurance on your staff if they get injured. You have to declare your annual payroll to COIDA. How do you do this? Through Joyty. Joyty and Charlene can do your COIDA returns. Where does it come from? Your payroll. Are you running a payroll? No, you've got a problem. You need to run a payroll. You need a payroll system. If you can't afford it, outsource it to a payroll administrator. That's what we do. If you can't afford a bookkeeper, outsource it to the bookkeeper. That's what we do. Partner, this bookkeeper is now partnered with a tax consultant, a labor practitioner, and all of your submissions are being done. When we go back to payroll and having staff, I'd also like you to bear in mind, there's more than one submission. There's a monthly submission of an EMP 201, which would declare your staff's UIF, your staff's PAYE, your percentage of UIF as a company cost. And when you get to a certain amount, if it's 500,000 on your payroll a year, you then register for SDL, Skills Development Levy, which is also a percentage of your payroll if it's paid over to SARS. That needs to be done on a monthly basis. If you are not registered with SARS, you would need to know your 1% of UIF for the staff member and your 1% as a company contribution, and you would declare that straight to Department of Labor. You've got your UIF number. Every month you take that UIF number, you hop onto the Labor's portal, you say, I want to pay my UIF, that's your reference number, and you pay your 1%. So your staff are covered. UIF gives them insurance benefits, such as maternity leave. If their contract ends, they can claim UIF. If they're retrenched, they can claim UIF. If they retire, there's a retirement benefit. It also has a death benefit. I don't think everybody knows this. So your staff, if they die, their families have got a death benefit with labor. Don't deprive your staff of these benefits at 1%. The 1% is also capped. So what labor do is they cap it. So we get to 17,700 Rand odd salary. That's the 1% cap. Above that, you don't pay UIF on it because you only qualify to that amount of earnings. So it's not huge. So your directors that are earning 100,000 Rand a month, you're not paying 1% on 100,000. You're paying 1% on the 17,000. So there's your cap. So it's not a lot. The company contributions don't work out a lot. When it comes to the COIDA side of registering your business, it goes against your risk factor. So it's your annual payroll, and then it goes against a risk factor. So if your staff are at high risk, working machinery, working at heights, in any form of danger to themselves, they could be hurt, your risk factor is high, your COIDA percentage is high, but it covers them for any injuries, any disabilities, and if they are then boarded because of their injury, COIDA will pay them their salary. I think it's 75%, and they will continue to earn that. It's vital to give your staff that cover. So we've covered now the labor registrations. It's COIDA, it's UIF, and with SARS, it's PAYE, and it's SDL. With SARS, it's also your income tax and your provisional tax. These are the returns you're looking at happening in your business. Your SIPC return is an annual return of earnings, which you would submit to SIPC. Charlene would do that for you and keep your SIPC up to date. It's not a huge cost. I think it's 1,000 odd Rand a year, and it declares to SIPC what your PTY is doing. This also governs our information that our government has in business. So it informs the business sector that you're in, that this is what you did, and that's your tradings for the year. This is what our consumer index is also driven from. All these returns that we do. Where does that information come from? It comes from us, the bookkeepers, the payroll administrators, tax consultants, and the labor consultants. So Joyty would be your go-to for HR, your contracts with your staff. I had contracts with my staff that were worth nothing until they were reviewed. Because I just took one off the internet, changed it slightly, gave it to my staff, and I thought it was good. I wasn't. I was open for interpretation. They could have said, but that's very vague, so let's go to CCMA. So this is where, if you haven't got your HR in place, you are putting your business at risk. Partner with an HR consultant, get it right. If you're not declaring your tax correctly, partner with a tax consultant, get it right. All of that needs to be informed from your admin side of your business, your bookkeeper, your payroll administrator, your debtors clerk, your creditors clerk. Now, you as a business owner, first, your business type, where are you at? Your staff complement, where are you at? Your GP has to be well informed of your expenses. If you haven't got your GP right, no go, not going to happen. Don't run your business as a wallet. Keep it separate from your personal stuff. Don't pay your personal expenses out of your business. Have your own business account, your own personal banking account. Keep your stuff separate. Keep your business nice and clean. Let it run as its own. This gets us back to the opening statement. How do I now sell my business? How do I now get finance? If you've applied the formula I've just given you, you will have a set of books and a set of financials that has value. We call it equity. So when you can show equity in your business, you can get finance. You can get an overdraft. You can get a loan. You can sell it. You have a record of your assets. This all sits in your balance sheet. So your running costs of your business are sitting in your income statement, sale, cost of sale, gross profit, expenses, running the business, net profit. Net profit goes into balance sheet. Balance sheet holds members loan, the business bank account, your assets, and your liabilities. So that's where your equity sits. So if your assets are more than your liabilities, and you have good equity, you can get finance, you can get You can sell your business, and it just sets you up to go forward with a good set of records of what your business has done. If we expense through our income statements, all of our little dinners out with the family go to entertainment. Our shopping to Checkers goes to staff welfare. We can reduce our net profit, reduce our tax. Yay. Now I come to sell my business. I haven't fully declared my profit. How do I explain to the person who wants to buy it? But by the way, that is actually mine, and that is actually mine, and that is actually mine. And so you see the fine line of tax avoidance and tax evasion. We've got a fine line here in the business sector where we can say, okay, well, I want to take my family to dinner. I'm going to put it to entertainment. By the way, SARS is really looking at entertainment. Generally don't use it anymore, but we used to. Maybe that's not the best example. I went to Checkers. I bought 300 rands worth of cleaning agents for the house. I'm going to put it through my business as cleaning. We're going to all do it. Let's all be honest in our business and say, yes, we're going to do it. If I go and get myself a burger and a Coke while I'm waiting to see a client, I'm going to put it through staff welfare. It's okay to do that. Always say to my clients at the beginning of a financial year, what are your goals for this new financial year? Do you need to purchase a vehicle? Do you need to apply for a loan? Do you need finance? If you do, we need to look at how we close this financial year and deal with our net profit. Because at the end of the year, we're sitting with our net profit, and now we go, okay, we've got this net profit. Now we don't want to declare that. We don't want SARS to know about it. We don't want to pay the tax on it. We all know this. We're all in the same boat. We don't want to give them the money. They're gonna steal it. They're gonna waste it. We know that. Okay. But if you are driving towards your next financial year with the requirements of purchasing assets, getting finance, getting a loan, like Candace said, buying a new computer, whatever. If you have now pillaged your income statement to the smallest possible amount of profit so that you don't pay tax, how are you going to get finance? How are you going to sell your business one day when your retained income, so each year your net profit or loss goes into your balance sheet if you're a PTY, and it keeps the history and it grows every year or reduces every year as your business makes a profit or a loss. That informs the buyer of your business or the financer where your business equity is at. If you've got a loan account where you owe your business huge money, it is a problem. So you can still pay all your personal stuff through your business account, and you can appropriate it down into your drawings account. A lot of my clients do that. That comes with its own set of problems. If you've got an accountant looking at it, he's going to make you pay interest on that loan. If you're not going to pay interest on that loan, he's going to levy an STC tax. But on your drawings account, you're going to pay sales tax on that. So you can't run your drawings account into millions. SARS wants tax on it. You've received that money, the business has paid those accounts for you. So they will look at that. So you've got to keep all of this in mind. So just starting, I'm going to start a business, off I go, is not going to work. You definitely need good direction, good systems, and partner with the right people. And then your business will be a success. I don't know if I've run out of time or I've spoken too long.
No, you really raised some very, very interesting points, Nolene. I love what you've been bringing up. It brings us around circle back to the fact that those of the participants who've joined us on any of the other webinars know that I always speak about what is your vision, what are your goals. You mentioned there, what are your goals for this next financial year? What have you got planned? Do you want to expand your business? Are you wanting to bring on new equipment? Are you needing to upgrade? What are you looking at? And we talk about this a lot with business owners in how do you keep your customer service up? You need to know what your goals are. And I think what you shared with us really does make a lot of sense. If we were to be, I know a lot of us are in the boat where we have started businesses and we have not been compliant and we have not been keeping all our ducks in a row. And we've just been running as that sole prop where we don't have all the necessary paper, bits of paper and registrations, etc. in place. What would be your advice to the participants if they were wanting to, if they're looking at their business and saying, yes, actually my goals are this, and so I'm going to need to apply for that loan, or I need to buy that new vehicle to be able to move forward. Where do we start? What would you recommend that they do?
So I have a lot of clients that come to me and they've been trading for like 10 years and they've never had a bookkeeper, they've never been legal, they've just flown under the radar, and they suddenly go, maybe I should do this properly because it's actually quite a viable business. I think a lot of us start and think, oh, it might last a year or two, so I'm not going to bother. Let's give it a try. And then it becomes successful and it grows so quickly. And suddenly now you've got this, I don't work from home, I have a full business. You know, I'm not working from home, and I'm an entrepreneur, I'm a business owner. 1st of March 2023, start there. So we're finishing our financial year now. So our financial year runs from the 1st of March to the 28th of February. That is a financial year. You can choose a January to December. You've got to apply for that with SARS and say that's going to be my financial year, or your accountants, they'll know that's your financial year. So you can change it. But generally it's the 1st of March to the 28th of February the following year. So if you're at the point now where you have been using your business as a wallet and you haven't been keeping good records, and you're not sure where you're at, start on the 1st of March. Get yourself partnered with the right people, get the systems in place. It's actually not difficult. Then that gives you your first financial year, legal financial year will start now, 1st of March. And by the end of next year, February, you'll have your first full financial year to declare to SARS. They're going to receive it. They might say, what have you been doing for the last 10 years? If they do, we then start working backwards and we can catch it up. As long as we've got bank statements, we can recreate every single year you traded. And we can do it successfully. The missing piece would be your cash, because that was drawn and gone. So that's the hole we'd have. But we'd have enough on your bank statements alone to address a set of books for each year that you operated.
So you're saying that only if so we start with the new financial year,
yes.
And at the end of that year we then submit everything,
yes.
and so if SARS asks for anything else, then you would have a look at it.
Yeah. That's exactly what we've done with most of our clients, and to date SARS haven't asked us to go back. We are your prior records. They're just happy to have you. SARS go out of their way to help you stay in business. Why would they want to close you down? You are offering people employment. You are contributing to the economy. They want you to succeed. If they find you've been non-compliant for all these years, they give you the time to get it up to date. I'm going to close you down. I'm going to walk in and say, see, you've submitted your 24 financial year. What happened to the last 10 years? We're closing you down. You're going to jail, blah, blah, blah. They're not interested in doing that. They're going to say, here's the time, get it right, get it up to date, start capturing, get it submitted. That's where Charlene comes in. Charlene can get you a deferment in place. If it comes, oh, now you owe SARS tax for the last 10 years. We generally manage to get it where there's no tax, but there might be tax 10 years that you owe SARS. SARS will allow you to pay that off. So they're not going to close you down. They don't want to close you down. Labor doesn't want to close you down. They want you to succeed. They want to partner with you. They want to encourage you to be legal and compliant, and they want you to succeed. So the negative spin that people have on staff and labor is so unfounded because they're actually there to help you.
I think at the end of the day, the negative connotations comes from our lack of knowledge. We don't know, we don't understand. So we are too scared to jump in because it looks very complicated. And I think there's a lot of business owners who, the way that you describe things for us gives us a starting point. You know, where are you at with your business? What are your goals? What are you going to be registering as? How are you with staff? Do you have staff? I saw that there was a question that came up just now, something to do about working from home. And they were saying, how do you pay COIDA? I think you might have answered that. Paul, do we have any specific questions that you would like Nolene to answer before I carry on asking my questions? While they're busy looking for those, we'll continue a little bit. Oh, you there?
Yes, you can check your phone on your WhatsApp. We sent them to you.
Oh, excellent. Thank you. I will just do that. Okay, so, right, here's this question, Nolene. It says, what if your staff work from home? How does COIDA cover that?
That's a difficult one because I fully work from home and all my staff work from my home and some from their own homes. I still have to declare to COIDA, but because we're sitting at a desk, as I said, it's risk factor.
Risk
factor. So the risk factor of sitting here at the desk is
minimal.
So I pay, my COIDA assessment is so low that I actually fall below the minimum contribution a year. I pay them 2,700 Rand a year because my risk factor is so low that I have to pay them the minimum. I actually get assessed at below that, but they give me a credit into my next year. So it actually hand in gloves almost. So because I've had to pay the minimum, but my assessment was lower, my following year opens with a credit. So it's kind of strange how it works. But COIDA, you can't not have, no matter what you do. You have staff, you have to have COIDA. There's no.
What about if it's just you? If you are a single business owner?
Not necessary.
You've got your own life insurances
I'm
and all
a
that
sole
kind of
prop.
stuff.
I do my whole business. I do not need COIDA. I do not need Department of Labor. All I'm doing is declaring straight to SARS, and they are taxing me, provision me, and income tax when it's due. So these are my 2 tax returns. So I don't need to be with Labor. I don't need to be with COIDA. It's me. I'm a sole prop, and I'm not employing staff. So you don't need.
So that's why your first question is to your clients, where are you starting from? What kind of business are you running? What type? Okay, perfect. Right, another question for you says, the PNA/CNAs have employment generic contracts or online. Are these good enough to use?
They okay, but they have loopholes and they have gray areas. So if you have a staff contract, there's 2 options actually. LabourNet, I think we all know LabourNet.
Yeah.
If you contact LabourNet, they will review your contracts and they will tell you where to revise them. That you can actually partner with them and become subscribed to them. It's not very expensive. And they will cover you and your staff for anything labor related, or you go to Joity or a labor consultant and ask them to review your contracts. And then they will make sure your contract is in the right format and has the right terms and terminology. That's where we get stuck. We speak normal. We don't speak labor. We don't speak what Labor Department wants to see or hear in a contract. So with my one, and you all know that Labor are visiting sometimes twice a year. They'll come to your premises and interview your staff, and they want to see the contracts. quite often I have to get that contract back and they say, oh no, now change that wording. It's the wording. It means the same thing, but they don't like the wording. They want you to use a different term and terminology, saying the same thing. It's so irritating. Joyty will review the contract. She'll make sure that's in the right terms and terminology. You protected and
Your staff are protected.
That's
Nice.
the bottom line. So that's where Joyty as a labor consultant is so important.
Perfect. The next question here is quite a good one as well. Thank you everyone for your questions. We do appreciate them. This one says, how do I do a cash flow forecast for my small business? Where do I start?
Okay, so cash flow forecast is my nemesis. All you're doing is taking your sales, cost of sales, and expenses for the month. So you have to have a good bookkeeping program in place to get this. Otherwise, you don't have it. You don't have that in place, you can't have it. Then you take it and you forecast it. So every month I pay 20,000 Rand rent. Every month I pay about 2,000 Rand on phones. You forecast it. These are my sales, and they're pretty, mine is perfectly consistent. I'm one of the few lucky people that have retainers, so my income doesn't vary much. So I can forecast my income perfectly. I can forecast my cost of sales perfectly, and my general expenses, I can forecast them, and that gives a year-to-date net profit, and that's what they want to see. So they're wanting it for a year. Sometimes they ask for a 2-year cash forecast, which to me is like, oh my goodness, with our economy, we don't even know tomorrow what our water and lights are going to be. So it is difficult, but it's achievable. Yeah.
So the starting point for our participants today would be to, number one, make sure that you have got your admin, your bookkeeping admin, all in place so that you've got a set of books to work from that you can now make the forecast from.
Yeah.
Correct. Okay.
Yes, absolutely. If you are doing it all yourself, I have a template of an income statement and a balance sheet, which I can send, and you can work in that monthly. And you can
That'd be ideal.
A set of books that could go to your tax consultant and declare to SARS.
Perfect. So perhaps as a thank you to the people who've attended today, if you want to send me that template, I will send it on by email to all of the participants, and they can.
That's a good starting point. Just to start record keeping, even if you just start on the Excel spreadsheet. Joyty, who's part of our link, she's using that template, and she's running her business on that template that I sent her. And it's perfectly good for her to give that to Charlene to do her tax work. So you don't have to partner with me or employ a bookkeeper if you can't afford it. It's all affordability. It's all what cash flow is available. If cash flow is not there, you can't afford anything. Cash flow sits in your debtors. So your customers owe you 100,000. You don't have 100,000 in your bank. That's cash flow. Only 50,000 came in. I've got to pay out 80,000 Rand. My debtors book is sitting with the 50,000. I'm 30,000 in overdraft. Drives me wild. That is cash flow.
Okay.
That's where cash flow comes from. So debtors book is so vital. If you've got somebody chasing your money, my clients are run on invoice. I invoice you, you pay me. I don't run debtors. So when you get your invoice, you pay me. It doesn't always work. I have a small debtors book, but I don't leave it alone, not for a moment. Every week I send out statements. Please, guys, if they still don't pay, I'm on the phone. Are you unhappy with the work? What is happening? Why aren't you paying? Oh, Nolene, we're in a bit of a financial position. I make a note. I understand. Pay me what you can if you can't pay me in full. So that's what you need to chase. Your debtors book is vital. You can have R1 million on your debtors book and not 1 cent in your bank. Your cash flow is not there.
Not going to happen.
That is what cash flow is.
Wow.
Yeah.
So, yes. So I think before we go over time, we've got a few minutes left. I just wanted to thank you so much for sharing with us today. I think our participants can agree that we have had such an informative session. So a huge thank you to you for sharing your knowledge and your experience with us, because I think at the end of the day, as daunting as finances can be, you've really made it simple and easy to understand. And if we start with the basics, we can then build on that and move forward. So I know that my background team, Nolene and Mpho, have been sharing links in the chat session. I will also be in touch with all the participants after the event to share those links again. So Nolene, hopefully you'll have lots of people following up with you and querying. I would also like to remind all the participants that Nolene is available for conversations and discussions. And if you are at all concerned about where you are with your finances, please do give her a shout. We will make a note of any of the extra questions coming through. Nolene, I'll be in touch with you to ask those questions. And yes, let's share the knowledge and let's help our participants to grow their businesses. As you said, it all comes down to the economy of South Africa. So if we want to succeed in our businesses, we need to be doing things right and supporting each other. That being said, I'd like to also put out there for all the participants, our next webinar is taking place on the 12th of April, and we will be talking to another guest speaker about how to lead and inspire your team. So the staff that Nolene has been talking about today that we're going to be looking after by making sure we're paying all the right things. How are you going to lead and inspire your team? We will be discussing this at our next webinar, which is taking place on the 12th of April. And that's not the only exciting thing. The next part, which I would like to share with you, and it is a one-time opportunity, is that the full digital program. So what we've discussed today is just one aspect of the digital program. The program is called Business at the Speed of Change, and it is a 6-module program, and you can buy the module and register for the first one of 2023, and registration opens on the 15th of February. So if you are interested and would like, or you would like to know more, please do contact me. We have a special code for you. The code is WEB, W-E-B 323. If you quote that number on your registration, you will be in line for a 500 Rand discount on the purchase price of your program. So we do look forward to seeing all of you at the next webinar, and hopefully you will be signing up to do the program and learning a lot more of these kinds of things about running your business, getting more in depth about the seriousness of setting goals, of understanding your why, and of making sure that your business runs successfully so that you can support your family, that you can spend more time with your family, that you can achieve the goals that you set for this financial year. 2023 is going to rock. So Nolene, I really appreciate your time. Is there anything you'd like to add?
No, just don't be scared of tackling it. Just get in there, get it right. It's worth saving.
Excellent.
Yeah.
I like your thought process on that. Saving goes a long way for those rainy days.
Yeah.
Awesome. Well, that's it from us. Thank you so much, everybody, for joining us today. I hope you've enjoyed it, and we look forward to seeing you on the next session. Thanks, Nolene. Bye, everybody.